Question 1. Which of the following is a key difference between commercial general liability (CGL) and professional liability insurance? A. CGL covers risks associated with errors in professional services, while professional liability covers bodily injury and property damage. B. CGL is designed to cover bodily injury and property damage, while professional liability covers claims related to professional services and negligence. C. CGL covers damage caused by pollution, while professional liability focuses on business interruption coverage. D. CGL offers coverage for contractual liabilities, while professional liability provides coverage for employee dishonesty. Answer. B. Explanation. Commercial general liability (CGL) insurance primarily covers bodily injury and property damage resulting from business operations, while professional liability, also known as errors and omissions insurance, covers claims arising from negligence, errors, or omissions in the professional services provided by an individual or business. The distinction is critical as CGL does not cover professional mistakes or negligence, which is the core focus of professional liability insurance. Question 2. Scenario-based question. Mr. Thomas runs a construction company and is in the process of building a commercial office complex. During construction, a fire causes significant damage to the building structure. Mr. Thomas is concerned about how his insurance will respond. What type of policy would most likely cover the damages to the office complex during its construction? A. Commercial general liability (CGL). B. Workers' compensation insurance. C. Builders' risk insurance. D. Business owners policy (BOP). Answer. C. Explanation. In this scenario, the most appropriate coverage for damages during construction is builders' risk insurance. This insurance provides coverage for property under construction, including buildings, materials, and equipment. It covers damage caused by various perils, including fire, while the construction project is ongoing. The other options are not suitable for covering construction-related property damage. CGL covers liability for bodily injury and property damage, but not for the construction site's property itself. Workers' compensation insurance covers injuries to employees, not property damage. BOP is a package policy that combines property and liability coverage, but is not specifically designed for the risks associated with construction projects. Question 3. Which of the following is an example of an endorsement that can be added to a commercial insurance policy to extend coverage for specific situations? A. Liability exclusion. B. Additional insured endorsement. C. Coinsurance clause. D. Loss history. Answer. B. Explanation. An additional insured endorsement is commonly added to commercial policies to extend coverage to another party, such as a client or contractor, under the policyholder's existing insurance. This is particularly common in construction contracts or rental agreements where one party needs to be covered by the insurance of another. The other options are not endorsements. Liability exclusion removes coverage for certain risks or perils and does not extend coverage. Coinsurance clause defines the amount of coverage the policyholder needs to maintain, but it's not an endorsement. Loss history refers to past claims and does not modify the coverage provided by the policy. Question 4. Which of the following best describes the function of the experience modification rate (EMA) in workers' compensation insurance? A. It adjusts the policy's premium based on the company's claim history relative to other businesses in the same industry. B. It provides a discount on the workers' compensation premium based on the company's size and revenue. C. It represents the insurance company's share of the premium cost for workers' compensation coverage. D. It determines the coverage limits for a business based on its past workers' compensation claims. Answer. A. Explanation. The experience modification rate (EMA) is a factor used to adjust workers' compensation insurance premiums based on a company's claims history relative to other businesses in the same industry. A lower EMR indicates fewer or less severe claims, which can result in lower premiums. A higher EMR indicates higher claims activity, leading to higher premiums. The MR does not affect the coverage limits or the insurance company's share of the premium cost, but directly influences the cost of the insurance premium for the employer. Question 5. Which of the following is NOT typically covered under business owner's policy (BOP)? A. Property damage due to fire. B. Liability for customer injury on business premises. C. Workers' compensation claims. D. Business interruption due to a covered loss. Answer. See explanation. A business owner's policy BOP typically covers property damage liability for customer injuries and business interruption. However, workers' compensation claims are not covered under BOP, as workers' compensation is a separate type of coverage required by law to provide benefits for employees injured on the job. A BOP is more comprehensive than a standard property or liability policy, but it does not include coverage for employee injuries, which is specifically covered under workers' compensation. Question 6. Scenario-based question. MS. Green operates a consulting firm and has a policy with a commercial general liability CGL insurer. One of her employees accidentally damages a client's property during a meeting. The client is now requesting compensation for the damage. Which section of the CGL policy would respond to this situation? A. Coverage. B. Personal and advertising injury liability. B. Coverage. A. Bodily injury and property damage liability. C. Coverage. C. Medical payments. D. Products and completed operations coverage. Answer. B. Explanation. The appropriate coverage in this scenario is Coverage A. Bodily injury and property damage liability. This coverage applies when a business is legally liable for bodily injury or property damage caused by its operations, including actions by employees during the course of their work. In this case, the employee's accidental property damage would be covered under this section of the policy, as it falls within the scope of liability for property damage caused by the business's operations. Coverage B pertains to personal and advertising injury, which is unrelated to property damage. Coverage C covers medical payments but does not address property damage. Products and completed operations covers damage caused after a product is sold or a service is completed, which is not the case here. Question 7. Which of the following is typically covered by a commercial auto insurance policy? A. Personal injury claims resulting from accidents on the way to work. B. Physical damage to a vehicle due to theft while parked overnight. C. Property damage caused by a vehicle involved in a non-business related incident. D. Injuries to employees of the company while driving their personal vehicles for business purposes. Answer. B. Explanation. Commercial auto insurance covers various situations, including physical damage to a vehicle due to theft while it is parked, provided the vehicle is used for business purposes, and the policy includes comprehensive coverage. It also covers physical damage resulting from other causes like accidents or vandalism when the vehicle is used for business operations. Personal injury claims are typically covered by personal auto policies, not commercial auto insurance. Property damage caused by a vehicle in non-business related incidents would typically not be covered under a commercial policy unless the vehicle is used for business purposes at the time of the incident. Injuries to employees while driving their personal vehicles would generally fall under workers' compensation insurance, not a commercial auto policy. Question 8. Which of the following is an example of a special causes of loss form in a commercial property insurance policy? A. Broad form. B. Named perils. C. Basic form. D. Special form. Answer. D. Explanation. The special form, also called war risk or open perils, is the broadest coverage under commercial property insurance policies. It provides coverage for all risks of direct physical loss or damage except those specifically excluded in the policy. This form covers a wide range of perils, making it the most comprehensive form of property coverage. Broad form covers a list of named perils, but it is not as comprehensive as the special form. Named perils is more restrictive, covering only those perils specifically listed in the policy. Basic form is the most restrictive and covers the least amount of perils, only those specifically named in the policy. Question 9. Which of the following best describes the difference between excess insurance and umbrella insurance? A. Excess insurance provides additional coverage above a policy's limits, while umbrella insurance provides broader coverage across multiple policies. B. Excess insurance applies to a single policy, while umbrella insurance applies only to liability coverage. C. Excess insurance is a type of commercial auto policy, while umbrella insurance applies only to property policies. D. Excess insurance provides broader coverage, while umbrella insurance covers only specific high-risk activities. Answer. A. Explanation. Excess insurance and umbrella insurance are both designed to provide coverage above a policy's primary limits, but they differ in scope. Excess insurance provides coverage above the limits of a single underlying policy, typically extending coverage only for that specific policy. In contrast, umbrella insurance provides broader coverage across multiple policies, offering additional protection for both liability and property damage. This broader coverage can extend to various types of insurance policies, including CGL, commercial auto, and others. Excess insurance is more narrowly focused on one policy, while umbrella insurance provides coverage for multiple types of policies and risks. Question 10. Which of the following is an example of a risk management strategy commonly used in commercial lines insurance? A. Risk avoidance through contract negotiations. B. Reliance on insurance solely to cover all risks. C. Allowing risks to accumulate to determine the business's actual exposure. D. Ignoring the purchase of coverage for catastrophic events like natural disasters. Answer A. Explanation. Risk avoidance is a strategy in risk management where businesses take actions to eliminate or prevent risks from occurring. This can often be achieved through contract negotiations that shift or limit liability, making it a proactive approach to risk management. It is one of the most effective strategies in reducing exposure. Relying only on insurance coverage does not mitigate risk, it only provides compensation after loss. Allowing risks to accumulate without addressing them increases exposure to potential loss. Ignoring catastrophic coverage, such as for natural disasters, exposes businesses to significant financial risks. Question 11. Which of the following statements about liability insurance is true? A. Liability insurance only covers damage to property caused by the insured party. B. Liability insurance protects the insured party from claims for bodily injury or property damage caused by their negligence. C. Liability insurance provides protection only for criminal acts committed by the insured. D. Liability insurance covers personal injuries to the insured party regardless of fault. Answer B. Explanation. Liability insurance is designed to protect the insured party from claims for bodily injury or property damage caused by their negligence or actions. It does not cover criminal acts, personal injuries to the insured, or damage limited to property alone. The purpose is to provide financial protection if the insured is found legally responsible for harm to others. Question 12. Which of the following would be considered an example of moral hazard in insurance? A. A company fails to install safety equipment, resulting in a greater risk of fire damage. B. An individual purchases insurance for their business and takes no steps to mitigate fire risks. C. A business installs fire sprinklers to minimize the damage from a potential fire. D. A homeowner raises their deductible to lower insurance premiums. Answer B. Explanation. Moral hazard occurs when an individual or business is less likely to avoid risk or exercise caution because they know they are covered by insurance. In this case, the business takes no steps to mitigate the risk of fire, relying on the insurance to cover potential losses. This behavior increases the risk of claims because the party feels protected. Question 13. Which of the following is a key difference between a named perils policy and an all-risk policy? A named perils policy covers only the specific risks listed in the policy, while an all-risk policy covers all risks unless specifically excluded. B. A named perils policy offers broader coverage than an all-risk policy. C. A named perils policy does not require payment of premiums for certain risks. D. An all-risk policy is usually more expensive than a named perils policy because it covers fewer risks. Answer A. Explanation. A named perils policy covers only the specific risks that are named in the policy, whereas an all-risk policy, also called special coverage, provides broader protection by covering all risks of loss or damage except those explicitly excluded in the policy. As a result, all-risk policies tend to offer more comprehensive coverage. Question 14. Which of the following is not a common exclusion in a standard commercial general liability CGL policy? A. Damage caused by an employee's intentional actions. B. Bodily injury to employees in the course of their employment. C. Damage caused by pollution or environmental contamination. D. Losses arising from contractual liabilities. Answer D. Explanation. A standard commercial general liability CGL policy generally does not cover losses arising from contractual liabilities, as it does not extend coverage to obligations assumed under contracts. The policy typically covers bodily injury, property damage, and personal injury, but exclusions apply for intentional actions, employee injuries, and environmental contamination. Question 15. Which of the following is not a typical characteristic of a workers' compensation insurance policy? A. It covers medical expenses for employees injured on the job. B. It provides temporary disability benefits to employees unable to work due to injury. C. It offers death benefits to the families of employees who are killed in work-related accidents. D. It pays for employee negligence or intentional harm to others on the job. Answer: D. Explanation. Workers' compensation insurance does not cover negligence or intentional harm caused by employees. Instead, it provides benefits for medical expenses, temporary disability, and death benefits related to work-related injuries, regardless of fault. It is designed to protect workers injured on the job, but it does not cover harm caused intentionally or due to an employee's negligence in other contexts. Question 16. Which of the following coverage types would be appropriate for protecting against the loss of business income due to a covered peril? A. General liability insurance. B. Commercial auto insurance. C. Business interruption insurance. D. Workers' compensation insurance. Answer: C. Explanation. Business interruption insurance is designed to protect a business from loss of income due to a covered event, such as a fire, flood, or other disaster that temporarily shuts down the operations. This coverage helps replace lost income while the business is unable to operate. Question 17. Which of the following scenarios would typically be covered under commercial property insurance? A. Damage to inventory caused by a flood. B. Injury to employees while working in the office. C. Liability for harm caused by a product defect. D. Employee theft of company property. Answer: A. Explanation. Commercial property insurance covers damage to physical property, including buildings and inventory, due to perils such as fire, theft, or flood, if included in the policy. The other scenarios would be covered by different types of insurance policies: workers' compensation for employee injuries, product liability for product defects, and crime insurance for employee theft. Question 18. Which of the following is an example of direct loss in the context of commercial property insurance? A. Loss of income due to the business being unable to operate after a fire. B. The cost of legal fees to defend against a liability lawsuit. C. Damage to a building caused by a fire. D. Loss of reputation due to a product recall. Answer: C. Explanation. Direct loss refers to damage or destruction to physical property as a result of a covered peril, such as fire damage to a building. Indirect losses, such as loss of income, are typically covered under business interruption insurance. Legal fees and loss of reputation are unrelated to direct physical property damage. Question 19. Which of the following best describes the purpose of the declarations page in an insurance policy? A. To outline the specific exclusions of coverage. B. To provide the basic details of the insurance coverage, including the policyholder coverage limits and premiums. C. To specify the conditions under which the insurance company may cancel the policy. D. To list the endorsements that modify the terms of the policy. Answer: B. Explanation. The declarations page of an insurance policy provides the basic details of the coverage, such as the policyholder's name, policy limits, premiums, and coverage period. This page does not list exclusions, conditions, or endorsements which are typically found elsewhere in the policy. Question 20. Which of the following is typically excluded from a homeowner's insurance policy? A. Damage caused by a falling tree. B. Theft of personal property. C. Damage from a sinkhole. D. Liability for injuries to a guest on the property. Answer: C. Explanation. Damage from a sinkhole is typically excluded from standard homeowners insurance policies, though it may be added as an optional endorsement in some cases. Homeowners insurance typically covers damage caused by falling trees, theft of personal property, and liability for injuries to guests, but sinkhole damage is a specific exclusion unless explicitly added to the policy. Question 21. Which of the following would not be covered by a homeowner's insurance policy? A. Fire damage to the home. B. Water damage from a burst pipe. C. Damage caused by an earthquake. D. Theft of personal property. Answer: C. Explanation. Earthquake damage is typically excluded from a standard homeowner's insurance policy. Coverage for earthquake damage can usually be purchased as an endorsement or separate policy. Fire, water damage from a burst pipe, and theft of personal property are typically covered by a standard homeowner's policy. Question 22. Which of the following best describes the principle of indemnity in insurance? A. The insurer will pay the insured for their loss, regardless of the amount of the loss. B. The insurer pays the insured an amount that restores them to the financial position they were in before the loss. C. The insurer will pay for the entire amount of loss, regardless of the deductible. D. The insured is entitled to more than their loss in the event of a claim. Answer: B. Explanation. The principle of indemnity ensures that the insured is reimbursed for a loss but does not profit from it. The goal is to restore the insured to the financial position they were in before the loss, not to provide a windfall. Question 23. What does comprehensive coverage typically cover for an insured vehicle? A. Damage caused by a collision with another vehicle. B. Damage to the vehicle from weather events, theft, or vandalism. C. Damage to the vehicle caused by an accident while driving under the influence. D. Medical expenses for injuries sustained in a car accident. Answer: B. Explanation. Comprehensive coverage generally covers damage to a vehicle caused by events other than a collision, such as weather events, theft, or vandalism. Damage from a collision is covered under collision coverage, while medical expenses are typically covered under personal injury protection (PIP) or medical payments coverage. Question 24. Which of the following is not typically considered a liability insurance coverage? A. Bodily injury liability. B. Property damage liability. C. Medical payments coverage. D. Personal injury liability. Answer: C. Explanation. Medical payments coverage is not a liability coverage, as it covers medical expenses for the insured and their passengers, regardless of fault. Liability coverage is designed to protect against bodily injury, property damage, and personal injury to others that the insured may be legally responsible for. Question 25. Which of the following best defines subrogation in the insurance context? A. The insurer's right to cancel a policy when premiums are unpaid. B. The insurer's right to recover costs from a third party responsible for the loss. C. The process by which the insured can appeal a claim denial. D. The process of adjusting the amount of an insurance payout based on the insured's fault. Answer: B. Explanation. Subrogation refers to the process by which an insurer, after paying a claim, seeks to recover the costs from a third party responsible for the loss. This typically occurs when the loss is due to the actions of another party, and the insurer may attempt to recover the payment it made to the insured. Question 26. Which of the following best describes the purpose of umbrella insurance? A. To cover all risks not covered by any other insurance policy. B. To provide additional coverage above the limits of other liability policies. C. To cover only property damage that exceeds the primary insurance coverage. D. To cover medical costs for injuries caused by the insured party. Answer: B. Explanation. Umbrella insurance is designed to provide additional liability coverage above and beyond the limits of standard homeowners, auto, and other liability policies. It acts as a safety net for large claims that exceed the limits of existing coverage, protecting against serious financial loss. Answer: D. Explanation. Flood insurance typically covers damage caused by floodwaters, including damage to the structure and contents of a home as well as vehicles. However, it does not cover damage from a burst pipe, which would typically be covered under homeowners insurance. Question 20. Which of the following best describes adjuster liability? A. Liability for damage caused by an insurance adjuster during the claims process. B. Liability of the insurer to pay for medical expenses under a personal injury policy. C. Liability for an adjuster's errors in estimating the value of a claim. D. Liability for damages caused by a third party during the claims investigation process. Answer: C. Explanation. Adjuster liability refers to the potential liability an adjuster might face for errors or omissions made in estimating or handling claims. If an adjuster makes a mistake in evaluating a claim, they or their employer may be held accountable for any financial losses that result from that mistake. Question 29. Which of the following would typically be covered under a commercial crime policy? A. Damage to business property due to a fire. B. Theft of business property by employees. C. Injury to customers on business premises. D. Damage to inventory due to a natural disaster. Question 29. Which of the following would typically be covered under a commercial crime policy? A. Damage to business property due to a fire. B. Theft of business property by employees. C. Injury to customers on business premises. D. Damage to inventory due to a natural disaster. Answer: B. Explanation. A commercial crime policy covers losses related to theft or fraud, including theft of business property by employees. It typically does not cover damage from natural disasters, which would be covered by property insurance, or customer injuries, covered by liability insurance. Question 30. Which of the following is typically excluded from a homeowner's insurance policy? A. Theft of personal property from the home. B. Damage caused by an earthquake. C. Fire damage to the house. D. Liability for injuries to others on the property. Answer: B. Explanation. Earthquake damage is generally excluded from standard homeowners insurance policies. However, fire damage, theft of personal property, and liability for injuries are typically included in a standard homeowners policy. Earthquake coverage can be added through a separate endorsement or a standalone policy.